Good morning, everyone. Let's jump straight into it. Our market analysis for week beginning October 24th. Let's go. So we'll start here with a look at the ES S&P 500 futures. As you can see, starting from the overnight session, we're having a bit of developing momentum. So into Sunday night, we had this nice bounce off around 29.90. And as the morning has continued, we've only continued to press higher into Friday, Thursday, and Friday's previous highs of the consolidation. Now, given that the market has been holding up so incredibly well in the midst of all of these negative geopolitical headlines, the trade war between the US and China, the Brexit negotiations coming soon to an end, the geopolitical tension in the Middle East between Turkey, Syria, and Russia, definitely I believe the risk has to be to the upside, which means, generally speaking, when you see a security and investment vehicle, an asset, showing strength when it should be acting weak, that is a tip off. That usually tends to be a tip off that there is demand, there is buyers, there is sentiment that is encouraging continued bullish participation despite what may be going on in the headlines. And given the S&P 500 strength in particular, I have to say here the risk is to the upside. But then, as a professional trader, we think in risk to reward. Okay, if the risk is to the upside, where could we possibly be going? So very first level, you can clearly see here 3008, which was Thursday's high. We are now 12 points up on where we closed on Friday evening. So we just tested an intraday high at around 3002. So of course, we're going to be looking at 3008 very closely. And then beyond that, we have a high over here at 3012 to contend with. So risk versus reward at this point. So we have another 10 to 12 points of upside versus a lot of downside down to 2982.5, even all the way down to 2947. So I would be using this opportunity, if I'm already long, to take profits into this retest of 3012, possibly get up to a high of probably 3015, and then look to see what the market does. Do we burst through with energy? Do we tap that level and immediately sell off? Do we bounce around that level and begin to create new value areas at those higher prices? This is what we need to see in order to give us conviction one way or the other. Because this market has simply been really difficult to trade because of the moves that have been happening in the overnight and in the regular hour session. So I advise caution out there. I currently do have a long position on. I am actually long Twitter. I spoke about that last night in last night's video. And the Twitter play is simply because it has earnings coming up. We know all of this year Twitter has been in a very nice ascending bullish formation, as you can see here. And so all I'm simply looking for is a push into the 50-day moving here at around 4150 to the 4170 level to take it off if we get there before earnings. That's the play on Twitter. Generally speaking, the software group has taken a bit of a beating, especially after we had a lot of different downgrades in the sector on Now, ServiceNow. Let's see, on Roku has probably been the one that's been holding up the best. You have TTD as well. The sentiment around these names has been particularly cautious, which in my opinion makes them prime bounce targets. And by bounce targets, I'm not talking about getting greedy and looking for going all the way back up to test highs of its ranges, but simply for when momentum does come back, these are possible areas that you can look into. So let's take a look at some of the bigger names. Amazon. Amazon seems to be holding up fairly well. As you can see in this nice little rectangle that I pointed out before, we managed to break above it, tap the 50-day, tap the 200-day, sold off, and we're now back at that level, the top of that prior consolidation. So if this level does hold, and looking at the pre-market prices, we're currently at 1766. So if this level does hold, we possibly can see some resumption of upside in Amazon, possibly even to retest this 1820 level in coming days and weeks. See what's going on with Google. So Google has been holding up pretty well, but the issue with Google is that you just never know where the momentum comes, what day the momentum is going to come on, and that's what makes it so difficult to trade. So which to me lends itself to more premium collection tactical trading. That being said, we are within sight of all-time highs at 1296, and so I would watch for any dip back into this recent consolidation range at around 1230. If it gets back to 1230, I'd definitely be a buyer there, looking for an intraday or 1 or 2 days of momentum to break 1263 and go ahead to test 1297. That being said, we are in a very headline driven trading environment, and so you need to be cautious. I would be using smaller position sizes, just so that you can participate if there is developing momentum to the upside. But when the downside comes, especially in this seasonally volatile period, it will come very quickly. And so I would definitely be a lot more tactical. I'll definitely be a lot more quick to take profits on any strength, selling into strength, and buying back into weakness, but with smaller position sizes. Let's take a look at Netflix. So Netflix reported last week. I was long Netflix from, I believe, the 263 level up to the 274, up to about here. And then after it gapped up and took off, I just left it alone because, as you know, I don't chase. And so Netflix gapped up on earnings, went up to test this region at around 310. 310 right here. Sold off all the way though down into once more that 282 level. Broke the 282 level and is now consolidating at around 273. Now this level is very important to watch. Let's see if buyers come in to support the stock at these prices, or if we have a slow meltdown back into 266 and possibly to retest the lows of 252. That is Netflix. To the upside, of course, we can target the most recent swing high at 310. Expect some consolidation there for a much bigger target to break through of the 200-day average up at that 336. That is Netflix. Let's take a look at Apple. Big Mama. Apple, of course, broke out to all-time new highs just last week, I believe, and we are consolidating at the highs. Now, Apple is a very important signal and or harbinger for the market. Where Apple goes, where Apple leads, because in particular for the Dow Jones, it is the world's largest company and is the largest weighted stock in the average. where Apple goes, it tends to drag the market along with it. And so we should be looking for any signs of weakness in Apple to possibly give us a hint or signal to more weakness to follow in the broader indices. Thus far, all Apple has been doing is consolidating at the highs, and so until at the very least Apple breaks below 232, I think the indices are going to hold up and continue probably building value at higher areas and bull flagging. Let's take a look at Costco. Costco, I was long from 286, but sold Costco into this move into 295. Since then, of course, Costco has consolidated nicely and then came to retest the low of this prior consolidation and then sprang out completely and is probably looking to test 307, which is the most recent swing high, particularly soon. This high here at 307. We may get there sometime this week if we do have some continued momentum in the overall market and in the buyers in this particular security. Now, my one area of concern would be the Procters and Gambles of the world. These have been the market leaders along with the home builders. See DHI. You can see Lennar, all in terrifically strong uptrends. So this is the reason why the indices are holding up. While some areas of the market may be underperforming, you have groups like these that have been stellar in the last 6 to 8 weeks. So we have this rotation out of names and rotation back into other names, and this is what is keeping the indices relatively flat but elevated, because the rotation from one sector to another is keeping things well balanced as we look to retest possibly all-time high. So we should also look at these leading names for signs of weakness to indicate what may be coming next for the market. As you can see, Walmart consolidating here very nicely at all-time highs at around 120. Let's take a look at McDonald's. Again, McDonald's, a leading name all year, has broken down out of this very nice uptrend above the 50-day moving average and is now in a bit of a descending channel. So what are we looking for here? Well, we're looking for these most recent lows here at 206 to be held, and we're looking to see if we do get some upside momentum, if we can break these most recent highs here at around 212 and 216. That should actually serve as some stiff resistance, but let's see what the market holds. Let's just check a few more utilities. Verizon, as you can see, in the last, I'll just switch this to a weekly chart. In the last 4 weeks or so, in fact, last 6 to 8 weeks, has done nothing but trend up. And so, in one sense, this market is a mixed bag because we have things, defensive sectors like utilities and consumer staples outperforming, which generally tends to portend to funds and market participants taking up defensive positions. Yet we are consolidating near all-time highs. And so it's when you have a mixed bag of variables, it is often best to wait for new information that can give you greater conviction one way or another. And as it stands right now, because we're so mixed, it's best to either not participate, wait for confirmation as to a direction, and or participate in small size. So for this week, we are floating just under all-time highs. I would expect the risk is to the upside at this point, given that we are starting Monday morning up 12 points. I am long Twitter. I am long actually CRM by a short put spread as well, and I will be looking to probably play some of the names in the software sector on any continued momentum, not via outright bullish bets, but by expecting certain levels to hold using short credit spreads. All right, guys, be safe out there this week. Thank you very much. Cheers.